Good evening and welcome back to the channel. Today we're covering AI infrastructure stocks that fuel the AI boom. These four stocks represent compelling opportunities in the AI infrastructure build-out, each positioned differently within the technology ecosystem. Seagate leads with 83% year-to-date gains and strong momentum, while Micron offers the highest analyst upside potential at about 30%. Lumen presents a turnaround story leveraging AI partnerships, and NRG Energy provides exposure to the massive power demands of data centers. Let's review the stock price performance comparison for Lumen, MU, STX, and NRG from July 1st to August 22nd, 2025. We're going to start with Lumen Technology. The ticker is LUMN, currently trading at about $4.61 USD. Lumen has evolved from struggling telecom into a critical AI infrastructure provider through strategic partnerships with Microsoft and Google. The company secured over $20 million in incremental cash flow from Microsoft alone, with plans to double its intercity network capacity. Recent quarterly results show revenue of about $3.1 billion, with improving debt restructuring having extended its maturities to 2028-2029. The current valuation is trading at 4.73 billion market cap with negative PE due to transformation costs. Our entry zone is around 3.8 to 4.2. The target price, most analysts are targeting 5.29. I'm thinking 5.5 to 6. There's a support level and a resistance level. The support level is between 3.37 and 3.5, and the resistance currently sits at 4.89 to 5.16. So we're going to try to buy somewhere around the 3.37 to 3.5 and hope that we break the resistance and move up to the 6 mark. That will represent close to a 60% upside. The key risks here is they have high debt levels. They're selling contracts for commercial environments, and they're trying to build these high-level fiber networks for AI connectivity. So there's a high debt level. Execution risk on their AI partnership. This is basically all their eggs are in one basket. If Microsoft decides to move on or not upgrade their contracts with them, that could mean a disaster for them. There's also a declining legacy telecom revenue as they phase out their commercial side of their telecom. That's no longer bringing in those revenue. Next on our list is Micron Technology. The ticker is MU. The current trading stock at 117.68 USD. It's basically the memory cycle recovery leader right now. Micron delivered record Q3 revenues in 2025 of about 9.3 billion, beating the estimates with 50% sequential growth in high bandwidth memory revenue. The company benefits directly from AI training and inference demand, with data center revenue more than doubling year over year. Strong fundamentals include about a 38% gross margin and positive cash flow of about $4.6 billion. The valuation currently is at 131 billion and market cap and a PE of about 21.2. It's pretty reasonable for growth. Entry zones, the current entry zone is very attractive at 110 to 118. Our target price is about 140 to 150. And the recent lows, the support levels that we've been bouncing off of are between 103 and 110. So we're already close to that resistant level. There's only an upside from here. That's why this one has the highest upside. And who is messaging me on WhatsApp? All right, let's mute that and continue. Currently, the resistance is around $125 to $130. And the key risks is memory cycle volatility. There's a China trade tensions, there's other competitors in those regions, and the tariff war between the US and China. There's also inventory management challenges due to the high demand from different companies that are reusing its memory, high bandwidth memory in their infrastructure. The Q2 financials across all of these is looking pretty good though. Seagate Technology, ticker STX, $159.2 right now. Seagate has had a surge of 83% year to date in their stock, driven by their heat-assisted magnetic recording technology that AI data storage demand. There's a lot of demand for storage like this. AI uses a ton of storage to process information. And the more that we're seeing the AI boom, the more demand there is for these HAMR technology, heat assisted magnetic recordings. The valuation currently 33.86 billion, which I'm shocked. It's pretty low. I thought it would be much higher. And it has a PE of about 23.5, which is also fair for growth prospects. Right now, the entry zone, we're looking at some pullback entry zones, which is about $150 to $157. The target price, most analysts are saying 163 to 100 to about 170. I'd probably go as high as 180. The support levels are around 147, 152, and it's very strong technical support, but the resistance is sitting at around 165. I think that this is just a matter of time before it breaks through resistance. There is a lot of demand for this storage. The company is transitioning to higher capacity, premium margin drives for hyperscalers. And the recent quarterly revenue of 2.44 billion showed a 13% sequential growth with strong margins of about 38%, which is a huge percentage for margin. Now, the risks that we see here is hard drive versus solid state competition. And there is some technology transition execution that could go wrong, but they've been around for a long time. Their data is being used, their hard drives are being used to store data on in a lot of systems, long-term storage, cold storage, and even hot storage. And their density just keeps getting bigger and bigger. I don't see them going anywhere. They are definitely going to be a competitor in the AI boom. And that's where I'm really paying attention to the underlying infrastructure in this conversation. Another company I would like to cover here is NRG Energy, currently trading at $145 USD. NRG, it's really hard to say their name because it sounds like you're saying energy, but it's NRG Energy. So it's a little bit of a tongue twister there. Well, they secured a 295 megawatt deal to supply data centers with potential to scale up to 1 gigawatt. Despite missing their Q2 estimates for their shares, $1.73 versus the 1.8 expected, not a huge deal. Revenue exceeded forecasts, and that was 6.74 billion. The company benefits from the surging electricity demand in Texas, mostly driven by AI data center expansions. That's why we're talking about this. The current market valuation, about 28 billion market cap. Their PE valuation is 62.5. It's reflecting huge growth expectations due to power requirements. Our entry zone for pullback, we're looking at about 145 to 150, which is what it's trading around currently. Target price, looking at about 175 to around 185. The support level is just below where it's trading right now, or right around where it's trading. We're at 143 to 147. Obviously, the resistance is around 175, 180, and that was its previous highs. So we really need to break out of that. The key risks is energy price volatility. We just can't predict it. There's probably going to be regulatory changes, always is, and grid stability issues as demands obviously are skyrocketing in Texas specifically, even from just the consumer market, not from the companies and enterprises like this. Now, an AI infrastructure boom of $1.37 trillion in AI market expansion is expected by 2030, and it's driving unprecedented infrastructure investment. Microsoft's 30 plus billion quarterly capex and Meta's 66 to 72 billion 2025 guidance highlights the spend in magnitude. These guys are spending literally countries' entire net worths on this AI boom. Data center and energy demand is surging. The project's global data center electricity consumption could double to 945 terawatts by 2030. If you don't know how much that power that is, I suggest you Google that. It's going to blow your mind. With AI as the primary driver, this creates sustained demand for both power generation and efficient infrastructure. And that's why we're talking about NRG, power generation, and efficient infrastructure, and that's Lumen Technologies. Memory and storage revolution. Obviously, AI workloads require high-speed memory, which is what we're talking about, Micron's high bandwidth memory, and massive storage capacity. That's Seagate's HAMR drives, creating a multi-year upgrade cycle. And this is going to go on for at least a decade or two. The recent price actions shows that STX, Seagate, is leading with 9.8% monthly gains. NRG and MU, Micron Technologies, experienced a temporary pullback of about 7%. This creates some decent entry opportunities. MU has the highest potential of value. That's where I'm really focused on. Now, Lumen maintained a modest about 2.2% gain despite the high volatility in the market. And I think that immediate positions in MU and NRG at the current levels is feasible. Scaling opportunities with Lumen once it weakens below 420. And I think a momentum play on Seagate as soon as it breaks above 160. So obviously, this is not financial advice. Do your own research. You need to implement your risk management. Make sure you're using the right position values, and make sure that you put stop losses on your stocks so you don't lose your money while you're sleeping. My suggestion is a limited individual position of 3% in MU and NRG, and 1 to 2% in Seagate and Lumen. Make sure that you keep monitoring the prices, have alerts set up depending on which platform you use. You may be able to set up alerts to tell you when those stocks are going up and down. And remember, stocks are not meant to be held forever. You buy the stock, you sell the stock, you take home some money, and then you reinvest that money in other stocks. Stocks go up and down, and unless you're holding the stock for 20 to 30 years, you should be selling it and gaining some of that profits. If you have any more questions, please make sure you leave a comment below, like and subscribe so that we can get to more audiences and reach our goal of 100 subscribers. Thank you so much for tuning in. Until next time, I'll catch you later.